You've seen it everywhere, right? The flashy headlines, the screenshots of insane profits, the gurus posing with rented Lamborghinis, buy this one crypto and get rich. Day trade your way to $1 million. I turned a grand into 100 grand in a month and you can too. Let's just be honest with each other. That's not a financial plan, it's a lottery ticket. They are selling a fantasy, a stressful high-risk fantasy that for the overwhelming majority of people ends in absolute disaster. Research consistently shows the brutal reality: somewhere between 80 to 97% of active day traders lose money. In fact, some studies show that only about 1% of day traders are able to predictably profit. It's a game that is fundamentally rigged against you. But here's the truth they don't want you to know: becoming a stock market millionaire is far more achievable and way less dramatic than they lead you to believe. It isn't about luck, it's not about finding some magic stock or timing the market perfectly. It's about a simple, proven and almost boringly reliable plan that I'm going to lay out for you right now. And this is the no-nonsense playbook to building a 7-figure portfolio even if you're starting from scratch. Before we get into the how, we have to completely rewire our thinking about what investing actually is. The reason so many people fail is because they are playing the wrong game. They think it's about action, excitement and uncovering secrets. It is not. It's about discipline, patience and understanding 3 foundational truths. The single biggest mistake new investors make is thinking they need to find the next Amazon or Tesla. They burn hours trying to pick that perfect stock. This is a recipe for failure. You're not just competing with other amateurs, you're up against entire teams of PhDs and supercomputers at hedge funds whose only job is to find an edge. You won't win that game. So what is the alternative? Well, you stop looking for the needle in the haystack and you just buy the whole haystack. You do this with something called a low-cost index fund or an exchange-traded fund, ETF. Think of it like a greatest hits album for the stock market. An S&P 500 index fund, for example, doesn't try to find the number one breakout hit. It simply buys a tiny piece of the 500 largest, most successful companies in America, giants like Apple, Microsoft and Amazon. When you buy one share of that fund, you instantly own a small slice of all 500 of them. You're diversified. If one company tanks, it's balanced out by the 499 others. As great companies grow, the value of your fund grows with them. And if a company starts to fail, eventually it gets dropped from the index and replaced by a more successful one automatically. This isn't some, fringe idea. This is the cornerstone of modern investing, championed by legendary investors like Warren Buffett. He has said time and again that for most people, the best thing they can do is own a low-cost S&P 500 index fund. It's how you get reliable long-term growth without the stress of trying to be a stock-picking genius. You capture the average annual return of the entire market, which has historically hovered around 7 to 10% over the long run. If you remember nothing else, remember this: the most powerful force in your financial life isn't a hot stock tip, it's the quiet magic of compound interest. Compounding is what happens when your investment earn a return and then those returns start earning their own returns. It's a slow rolling snowball that over decades becomes an unstoppable avalanche of wealth. But we're an impatient bunch. We hear a 10% a year and think that's too slow. I want to be a millionaire now. So people try to time the market. They sit on the sidelines waiting for a crash, or they panic sell when the things look scary. This is a fatal mistake. Study after study shows that trying to time the market is a fool's game. That almost always leads to lower returns than just staying invested. In fact, active traders who jump in and out of the market tend to underperform a simple index by a staggering 6.5% annually. Let's look at the math, because this is where it gets truly mind-blowing. Imagine you're 25 and you start investing just $300 a month. That's $10 a day. You put it into a simple index fund earning a historical average return of 9%. You never touch it, you just set it and forget it. By the time you're 65, that simple $300 a month will have snowballed into over $1.1 million. And you put in $144,000 of your own money over 40 years, and the market did the rest of generating nearly $1 million for you. But what if you wait? What if you think I'll start when I'm 35, once I'm making more, to hit that same $1 million goal by 65? You'd have to invest over $800 a month. By waiting just 10 years, you have to nearly triple your monthly investment to catch up. That is the power of time. It is your single greatest asset, not your stock picking skills, not the money you start with. It's the number of years you give your money to grow. Your job isn't to be a brilliant trader, it's to be a disciplined, patient machine. Let's be real, life happens. We get busy, we get scared during market crashes, or we just plain forget to invest. The secret to overcoming our very human flaws is to take you out of the equation almost entirely. The secret is automation. This is a classic classic concept of paying yourself first. Before you pay bills, before you buy groceries, before the paycheck even gets comfortable in your checking account, you set up an automatic transfer to your investment account. Every month, same day, same amount, it moves and gets invested without you lifting a finger. This does two critical important things. First, it removes emotion. The stock market will go up and it will absolutely go down. There will be terrifying headlines and stomach churning crashes. The S&P 500, for example, fell nearly 57% during the Great Recession. Your gut will scream at you to sell and make the pain stop. But if your investments are on autopilot, you keep buying. This strategy is called dollar cost averaging. It means you automatically buy more shares when prices are low and fewer shares when prices are high. It forces you to buy low without even thinking about it. And second, it makes building wealth effortless. Willpower runs out. By automating your investments, you don't need it. You build a system where your wealth grows in the background while you go on living your life. This is the set it and forget it strategy that the truly wealthy use. They don't obsess over daily charts. They build a machine and let it run. Alright, so we've fixed the mindset. You get it now. The path to $1 million is paved with boring consistency, not lottery ticket risk. Now let's get tactical. Here is the simple 3-step plan you can start today. Step 1 is you need a place to invest, called a brokerage account. But not all accounts are created equal. Your first stop should always be tax advantage retirement accounts. These are special accounts that give you a huge tax break, basically supercharging your growth. The two heavy hitters are the 401k and the Roth IRA. If your job offers a 401k, especially one with a company match, start there. A company match is free money. If they match 5% of your contributions, you're getting an instant 100% return. You will not find a better deal in the world of finance. Contribute enough to get that full match before you do anything else. Next, open a Roth IRA. With a Roth IRA, you invest money you've already paid taxes on, but here's the magic. All of your growth and all of your withdrawals in retirements are 100% tax-free. Think about that $1 million portfolio we talked about. In a Roth, you can pull all of that out in retirement without giving a single dime to the government. It's an unbelievably powerful tool. You can open a Roth IRA in about 50 minutes online at a major firms like Vanguard, Fidelity, or Charles Schwab. Once you're maxing out these retirement accounts, you can open a standard taxable brokerage account for any extra investing. Step 2. Choose your simple proven investments. This is the part that paralyzes everyone, but it's actually the easiest step of all. Remember pillar 1? We're not picking stocks, we're buying the whole market. Here's a dead simple, highly effective 2-fund portfolio that's perfect for 99% of investors. By the way, I'm not a financial advisor, this is for educational and entertainment purpose only. So fund 1 is a total US stock market index fund, a 70 to 80% of your portfolio. This is your workhorse, a single fund that buys you a piece of pretty much every public company in the US. Large, medium, small, it's the ultimate diversification. Examples for these are Vanguard's VTSAX or the ETF version VTI or Schwab's SWTSX. These funds have dirt cheap fees called expense ratios, often as low as 0.03%. That means for every $10,000 you invest, you pay just $3 a year. Fund 2 is a total international stock market index fund, 20 to 30% of your portfolio. While the US market is a beast, it's not the whole world. These funds gives you ownership in thousands of companies across the globe from Europe to Asia. It diversifies you even further. An example would be the Vanguard's VTIAX or the ETF version VXUS. That's it, seriously, that's the whole portfolio. You don't need to overcomplicate this. You don't need bonds yet if you have a long time horizon. You don't need to dabble in crypto trendy sector funds. A simple 2-fund portfolio is all you need to build incredible wealth. Simple is best. Step number 3 is automate everything. This is where you execute pillar 3 and you finally turn on your wealth building machine. Log into your new brokerage account, find the section for automatic transfers or recurring investments, decide how much you can realistically invest each month, whether it's $50, $500 or $1,500. Start with an amount that feels easy. You can and should increase it later. Set the transfer to happen a day or two after you get paid, then set it up so that money automatically buys your 2 funds in the percentage you choose, etc. 80% into the US fund and 20% into the international one. Once you hit confirm, you're done. You have officially built your automated wealth machine. Your only job now is to protect that machine from your own worst enemy, you. Don't check it every day, don't tinker with it, and do not under any circumstances stop the contributions when the stock market gets scary. Let it run untouched for decades. Your only other job is to try and bump your contributions amount up each year or anytime you get a raise. So becoming a stock market millionaire has nothing to do with a secret formula or a once in a lifetime stock pick. It's about a simple plan executed with relentless consistency over a long time. That's the real secret. The gurus want you to think it's complicated so you'll buy their courses and newsletter picker, it is not. It's about knowing that buying the whole market is safer and more effective than playing stock picker. It's about internalizing the earth-shattering power of compound interest and giving your money decades to do its thing. And most importantly, it's about taking your own emotions out of the game by automating the entire process. This path isn't glamorous. It won't make you rich by the next Tuesday. It's a slow and methodical and proven process, but it is a realistic one. It's a path available to absolutely anyone. Your journey of $1 million starts with the first small automated investment. Thank you guys for watching, and I hope you like and subscribe, and I'll see you guys in the next video.